Alright traders, I am back again with another video. In this video I want to look at Centurylink Incorporated, ticker symbol CTL. It's traded on the New York Stock Exchange. It's in the telecom services sector, and it is in the technology industry. Also, a lot of people have been asking me which is this platform that I'm using here. And this is just chartmill.com. So if you go to chartmill.com, you'll be able to find this under analysis. All right. So basically, I'm looking at this quotes here, and I'm going to go through some of this, and then we're going to look at the full evaluation, and then we'll go to the charts. So I basically want to break it down with the technical side, with the fundamental side and the technical side. So what I do when I'm looking for stocks, basically I'm looking for companies that are posting good earnings, because basically your earnings will drive your stock prices, right? So a company that's not making anything, their stock prices are not going to increase or do what you're going to see that company's performance basically through that stock. So I'm looking for companies with the best 1-year earnings growth, and also the best sales growth also. So basically I'll break a stock down by the individual characteristics of the stock. So I'm going to buy companies with best earnings, and I'm going to short the ones with the worst earnings. All right, so today I'm looking at it, like I said, Centurylink Incorporated, CTL. So when we look at this, the next earnings statement is I believe on Wednesday. That's 5/9/2018. So they're going to have earnings statement on Wednesday. If you look at this, you don't see any insider ownership, which not much really, which is a problem. You do want to see insider ownership, because that shows you that company management is also interested in that stock. Now, when you see a stock that all of a sudden starts having the insider ownership grows, I would be keep my eye on that stock, because something's probably about to happen. But here you don't see much of that at this point. But the one good thing is that there is a lot of institutional ownership. It's owned by 86.9% ownership, I believe. So based on the market cap, this is a large cap company. All right. So we're going to look at some of the ratios here. All right. So your PE ratio, your price to earnings ratio, it's basically the market value of the stock relative to the company's earnings. So it shows what investors are willing to pay for the stock based on its current earnings. So again, basically it shows the fair market value. So it's showing you the fair market value of the stock, and you usually want to see a high PE ratio, which would show you that traders are willing to pay more for the stock than what it's showing. All right. So basically it's all about anticipation. So the price earnings, your PE ratio here is 8.3, and your forward PE is 20.78. So with that forward PE 20.78, it's predicting to be higher. All right, so that's a good thing. Next we're going to look at your PEG ratio. So it's just showing for your 5-year ratio, which is increasing. All right. But basically the PEG shows the value of a stock based on the current earnings and potential growth. So this is looking at basically now the potential growth, 5-year growth. And it's a little bit of an increase, not a lot, nothing major. All right. So still it's showing that the stock has some potential. And then the next thing I'm going to look at is basically your price to book. And your price to book is used to evaluate if a stock is overvalued or undervalued. So it's kind of showing you the true value of the stock. Is it the true value, or is it the hyped up value? All right, so that's basically what your price book shows. And then next is I don't use this much, but your EBITDA. So the EBITDA measures the company's profit before your deductions. So it's basically the gross profits, just like your paycheck before taxes. All right, so that's the same thing that you would see with the company here. Okay. All right, so looking at the dividend yield, basically your dividend yield is like how much dividend you're receiving for every dollar. All right, so it's better to see a higher dividend yield, okay, because like I said, it's basically the amount you're receiving for every dollar. All right, so the dividend growth is not good. It's showing a negative 5.1, so that's not a real good thing. Investors don't want to see that. All right, so then we're going to look at the growth side of the of Centurylink. All right, so when we look at the growth side, we're looking at EPS, so that's earnings per share. All right, and the growth it's showing, 1 year growth is 90%, 90.82%. So basically your EPS measures the amount of net income earned per share of outstanding stock. So outstanding stocks or shares are basically the amount of shares held by all the shareholders. Okay, so it's all the shareholders' stocks together. All right, so the EPS is easily manipulated though, so I don't really follow it that close. I don't really look at EPS that much because it can be manipulated in a variety of ways. So this is one that I really don't follow, but I'm going to still talk about it because it's on this chart. Looking at the revenue growth, you could see currently the revenue growth, 5-year growth is not good, but they had a good Q2 growth. All right. So it was 24.11, all right. So then we look at the profitability side of Centurylink. When we look at the profitability side, we see first thing your return on assets. So it's showing 1.84%. And with the return on assets, basically this is showing you the percentage of profit a company earns in relation to the to its resources that it has. So the ROA can help you to see basically how well the company converts investments and assets into profit. So that's a big thing. You want to see that. So basically it measures how profitable a company's assets are. All right, and you could see that 1.84%. So not too bad. And then return on equity. Your return on equity is going to be the measurement of how well a company generates profits from shareholders' investments. Okay, so it's a little bit different than the return on assets. And then it also shows you how well like management is using its finances to grow the company. All right, so it can show you basically how well management is managing the company. That's a big thing too. So you want to see a high ROE because it indicates that the company is using its investors' funds effectively, pretty much. So definitely want to see that. Your net profit margin, 7.87. So the profit margin ratio really measures the amount of net income earned with each dollar of sales. So the gross profit shows how well a company manages its expenses in relation to the net sales. Okay, and then a lot of these ratios, you know, I'm not going to go into detail real deep about them and how to calculate them, but I also do have a stock course coming up that's going to be showing you pretty much how to you know, calculate all the ratios, what the ratios mean. Also going to show you how to trade stocks with different systems such as like Ichimoku, moving averages, RSI, divergence, and so forth. So I have that coming out shortly. So therefore I'm not going to go super deep into some of these, like telling you how to calculate everything. All right, but when we look at the profitability of Centurylink, it doesn't look super good. And based on what our 5-star equation here, it doesn't look super good. All right. So now let's look at the health of this asset, and it doesn't look really good. So when we look at the health asset, we're looking at the current ratio, and the current ratio measures the company's ability to pay off like the short-term liabilities with their current assets. So the short-term liabilities are due within that next year. So a ratio of say like 2 means that the company has like 2 times more current assets than current liabilities. You want to make sure the company makes enough money from the operations to support the activities are therefore it won't be, if they're not making enough money from operations to support these activities, then the company's probably going to fail. It's going to be in bankrupt. Won't be any more of that company. All right, and then your quick ratio here you see is 0.86. The quick ratio, your quick ratio measures the ability to pay the current liabilities when they're due. So the company can quickly convert assets to cash. So the company has to be able to quickly convert those assets to cash to pay off those liabilities. All right, and you want to see that. All right, so that's going to be pretty much it. Looking at the Altman Z-score. The Altman Z-score basically is just a measure of the company's likelihood of bankruptcy. So the likelihood of it going bankrupt, 0.43. So now I'm gonna go to the full report. So you get this full report, like I said, on chartmill.com. So I'm going to go to the full report. We'll look at the full report, and then we'll go right to the chart. We'll look at the chart based on technical analysis. So we did all of our homework here with the fundamental analysis and looking at ratios and everything, and trying to understand the value of the stock. We want to see if it's undervalued, overvalued, and if the company is profitable, what the growth prospects are with this company, if it's a healthy company, if it's one that's going to last, or if it has that possibility of going bankrupt. When we see all those things, then we know that if we even want to look at the chart, because the chart's not going to be able to tell you some of these things. So you're not going to be able to see these numbers and know that, well, this company is near bankrupt. You know, this company can't pay for any of its liabilities or anything. So if you don't see that and you're just looking at the chart, then when that company bellies up, you're stuck. All right, so you want to be able to do basically a little bit of fundamental analysis, understand some of the ratios and what they mean, and then you also want to be able to, if you're a technical trader, then you want to be able to hit the charts. I don't think you should just be fully technical, because you also want to, like I said, you want to see and know if this company is, you know, earning money. You know, like I said, the earnings drive the stock price, and if the company is not producing earnings, then more than likely it's not going to last. So you want to know that through those ratios. So let's go look a little bit deeper at the full report, and then we'll go to the charts. Let's go to the full report. So we didn't look at a full report, but now we're looking at the full report here. So when you look at this full report, basically it tells you, you know, on a scale of 1 to 10, the profitability of this company is a 3, not good. The valuation is a 3, not too good. Growth is a 2, not good. And health is a 1, not good. So just based off of these ratios and all the fundamental analysis, looking at this asset, I would say that it's kind of rather weak. Okay, so I went through all of these ratios pretty much, but you could look at them and see what they got here. So this is good for you to look at. It helps you to understand some of this, and you want to understand some of these ratios. So you could see, like I said, profitability wise. All right, so the return on assets, they're 47% outperformed. Return on equity, all right, pretty much 21% outperformed. And profit margin, 60% outperformed. Then dividend is pretty good, average. Then again, we look back for the valuation side, talked about your price to earnings. So basically it's saying that the price to earnings here shows that this CTL is a bit cheaper than the industry average. Let's see. And then again, like I said before, everything in green is really good. Red is bad, blue is average. So here's again, we talked about all these ratios, and then you could see how it stacks up against versus the industry. So other companies in the same industry, you can see how it stacks up. All right, and then we're going to go over here and look at the growth side. All right, so you could see here, not too good with the growth side, But then when I look down here at the revenue, yearly revenue, you could see from 1990 this company increased revenue every year, just about, right, every year. But then starting here 2012 it started to drop a little bit. But I'm looking at the last year, so in 2016 you could see what they had, 17,470,000,000, and then in 2017 it increased a little bit, 17,656,000,000. All right, so there was a slight increase, and that's one of the things you want to see, because the company was profitable last year, more profitable than they were the year before. So that's an important thing. But then when we look at the health of this company, everything is red and it's not looking good. All right, so some things give me an idea that this is a company that you could invest in based off of what you see. But a lot of the things, as far as the if we're looking at the growth and the health, don't give me a lot of confidence, really. Okay, so let's go look at these charts. The charts are probably going to give you a little bit more confidence than what you see in these numbers. But again, you want to learn these numbers, learn how to use them, and then you can understand better what it all means. Okay. All right, so let's go right to the charts. All right, so here we are with Centurylink on the charts, and like I was saying previously when we were looking at the fundamental analysis, really guys, you don't have to learn all those ratios, but you do have to learn some of those ratios. Okay, so some of those ratios will help you depending on what kind of a trader you're going to be. So are you going to be a value investor, or are you going to be a growth investor? So you're going to want to know those things, and then you're going to want to know which ratios you're going to want to be mainly concerned with based off of the type of trader you are. So you won't really have to use all those ratios, but sometimes it's good to just understand some of them and know some of them, because when you look at them and see them, you'll know what you're looking at. So that's why I think it's good to study those ratios and learn more about them. All right. Now, when you get to the chart may not show you anything that those ratios are saying. So a lot of times I like to look at the ratio, but then I like to just hit the chart. And when they both line up together, that's even perfect. That's more weight for me to, take a trade or to invest in an asset. Now, what I like to do when I start off with these charts, especially with these stocks, okay, because you could see this stock is coming off the 52-week low. I want to know where this stock has been before. I want to know how high it's been before. I want to know the potential of this thing. So I go to the 1-month chart, and I look at the 1-month chart, and I see the high of this asset and where the potential lies, or where it did lie previously. All right, but then you want to know why it dropped. All right, but 49.94 was the high, and basically where we are now is what, 18.49. So we're well off of that. All right, 30 points or so off of that. But when we look at this, you could see this flat level here roughly between 28 and like 25 or so. Had a nice big zone there where price kept on bouncing off for a long time. It looked like it started around 1998, and it lasted all the way here till we broke through this level and continued downwards in 2016. Then the market just continued that move to the downside. All right, and then it made this 52-week low, which was in line pretty much with the previous support and resistance level. So when we go back with this monthly chart and we see that now I'm using, I don't have my OBV here. I like to use this OBV to see divergence. All right, so when we look at this thing, there is no divergence really. All right, so I really love to use the divergence at the 52-week lows or support and resistance levels or something like that. But you can see here the market has flattened out because your Kijun-sen is flat. All right, now Tenkan-sen's aiming to the downside. You got a little bit of divergence here. That's kind of showing me that maybe this market's going to move back to the upside. But the thing about it is, you traded inside this one monthly candle for the past 6 months. Haven't been able to violate this one monthly candle that had a big drop. All the bears dropped in here, and you haven't been able to violate that since. So that's a strong sign too. But you see some strength coming into the market. You're flat here, so you may see the market range or pull back up closer to this level, which gives us about 23.0 or so, somewhere in that area. Now I want to go to the daily chart. All right. Now, before I go to the daily chart, I do want to stay on this monthly chart real quick because I want to look at one thing. Let me get rid of that. We're going to look at some measured moves here. So basically, a measured move is really states that an impulse or a correction from the past or current will be similar to, price and time patterns from the past. So those moves should equal each other or be the same based on time and length and all of that. So this also lines up with more of Ichimoku advanced stuff, because these measured moves are part of Ichimoku time analysis and wave analysis unknowingly. All right, so traders probably didn't know that, but they are. So if you know some of that, then you know a little bit of Ichimoku advanced theories, which there are 3 theories, which are going to be your time, your price, and your wave analysis. Your time, wave, and value observation theory. All right. So in Ichimoku, it's not price that's the most important thing. It's the time that's the most important thing. But when I look at this asset here, I'm going to stick to the basic things, and we're going to look at these measured moves. So they're like 1-to-1 ratios. So the market does the same thing from here to here as it would from here to here, or from here to here as it would from here to here, which are also called AB equals CD, or 1, 2, 3, 4. All right, otherwise known as. So I'm going to go ahead and look at these moves. I want to show you how these moves line up. Now, some of these numbers you won't have on your fib tool. So I'm using the fib extension tool, and I'm going from point 1. So let me show you how the points are drawn out here. And you have to have a 1, 2, 3 basically to develop that. Now with Ichimoku, a 1, 2, 3 would be like a V wave, and then we're shooting for 4, which would be an N wave. So I'm not going to get deep on Ichimoku because I don't want to confuse you guys, because we don't need to. 1, and then where the peak at the bottom was 2, that was this leg right here. I call this my equal sign, and then this is 3. So we would know where 3 was, and then we would be shooting for 4. We wouldn't know where 4 was. 4 is where we're going to get our target. So we would say 4 would be down here somewhere. So this would be 4. All right. And then if the market was moving back higher, then this would now be 1. And then you would have a 2 up here, a 3, and then a 4. All right. And then the market moved back down, you would have a 1. All right. I could go 2, 3, and then shooting for 4. And then I could go with a bigger picture, as I could go 1, 2, 3. So let's play them out and see how they play out. And then we'll go to the smaller time frame. This is just to show you how you find some targets sometime. Now this is longer term with the monthly, so you could do the same thing on all time frames. It's going to be the exact same thing here. All right, so let's go to look at this. So I'm going to go, like I said, 1, 2, 3, 4. Those legs should be the same. Now I'm using a fib extension tool. So I'm going to go there. And I'm not putting the time in here. I'm just going with the level. So we're going with the move, the measured move. We're not going with the time. So this leg, here's the 1%. This is the 100 right here. Basically, that's saying that 100. This leg is 100%. This leg is 100% of this previous leg. So the moves were the same. Time-wise, they were not the same, because you see one big candle made it down here, but it took only 3 candles to get to this point. So we're always shooting for that 1-to-1 ratio right here. 1 to 1 would be 21 points right here. All right, so at that 21 point right there, that's where the target was. And then you have this 22.41. That would be our first and then our second level. So this would be our NT. This is our N level at 1.0 or 100%. All right. And then you have other levels. So going backward, it would be the E level, your V level, your N, and your NT level. But when I'm shooting for targets, I always look for the 1, 2, 3, because I'm getting in on pullback. So a pullback trader is always going to pretty much go 1, 2, 3 is the pullback, the end of the pullback, and the market goes back down to where it was going previously. Well, if you can see that 3 level, because you got a bearish engulfing here, so you would look at that 3 level because you're bouncing on Kijinsen. That's going to be your resistance level. So you would know that this could be your 3 level, and it would have to play out a little bit for you. But you could, once you get into the trade here, you shoot for that target, that 1-to-1 ratio target. This is where that helps you. And then it also helps you to know that where the market may retrace or correct itself if you're thinking about getting into a trade. So let's look at that. You see we hit this level, all right, and then this also helps me to determine if the market has changed structure and went from bearish to bullish, because I'm going 1, 2, 3, 4. Now I go 1, 2, 3. I should have a move down here, but I don't. The market kept going. So now you kind of know when you see this pullback here and you're bouncing on Kijinsen or Tinkinson, you know which way the market's pretty much going. So you would go 1, 2, 3, 4. So when you get in here, because you're bouncing on Tinkinson and you have a Tinkinson bounce trade and an entry at this level, then you would shoot for 4 and you would have your target. Now I automatically use support and resistance levels for targets. So I would have marked that level right there for one target. I would have marked this level for another target, because when I get into a trade down here, I know I got to get past this level, and we did. So then I go for my measured move target, all right, which is going to be this leg to this leg to this leg, and we just missed our level. All right, so it's like 1, 2, 3, 4. We didn't hit the level. All right, now I'm on a monthly time frame. I'm going to go to do the same thing when we go down to the daily time frame. All right, and then the next one, I see 2 moves in here we could be looking at. All right, so if you were looking at a pullback here, so you see the market drop and then pull back, and then you're looking for the target if you entered at this point. So, and I'm just going back through history looking at the measured moves, and it helps you to understand that the market could do the same thing again. So we blew past our 1-to-1 level, and then we went to the V level. So we hit smack dab on that V level. All right, but now if I go with the big picture, I would say this was the 1, the 2, and then the 3 up here. Then I would see where my 4 was. So automatically I'm saying 1, 2, 3, 4. Now before I said 1, 2, 3, 4. The market moved lower, then it moved higher. Now I would be looking to go back to the downside, and I'm shooting for my target depending on where I got into a trade. But let's just mark it out now. So now it would be 1, 2, 3, and then we should hit smack dab on 4. And we did. We hit smack dibbity dab on 4. Okay. So then we move over here. 1, 2, 3. I'm not going 1, 2, 3 because we came back to this level up here. So now I'm going 1, 2, 3, 4, shooting for 4 down here. All right, so the big picture is from here, here, here to here. Now I'm not going to use this big wick because this isn't the norm of this market. You did have one here, but this is not the norm of the market. So let's use the normal and then go to this point. Then go up to the top here. Then you could see we came smack dab on this level again, the 1-to-1 ratio level. That's how you find your target. Why would I be looking at that? Well, I'm getting into a trade at the pullback level. I know the direction of the market. There's many ways I know the direction of the market. Basically Ichimoku with the TK crossover, and then I'm bouncing off of my Tinkinson or Kijinsen, and I get into a trade. So it's basically pullback traders getting into trades and seeing where the targets are. That's what it basically is. Now this is a monthly time frame. So let's go to the daily, look at this thing, see where we could see some of these targets. All right, so let's continue with the measured move real quick. We're going to go in this area, and then we'll start looking at why and where we want to look for this thing to do. So I went from here, 1, to the bottom, 2, because we're saying the market's going to continue dropping, and we go to the pullback level, was there, and it came right to 4. So it would be 1, 2, 3, 4, right? And then we could even have done the smaller move, because you did 1, 2, 3, and then you would have shot for this target, right? And then you could have went 1, 2, 3. So let's do that again. I'm going to just mark them. So we said first time we went 1, 2, 3. We went the big picture. Now we're going to go the smaller picture. 1, 2, 3, and shooting for 4. We went past our level, so we were good. We would have made our target. All right. And it wasn't an exact measured move. So now we would say 1, 2, 3. I can already see this one's much bigger, but let's mark it. But at least when you shoot for your target, a lot of times it's showing you that you're getting that target. 1, 2, and then 3. We went past that first target, went past that second target, didn't quite get the third level. Then the market started moving higher. Let's go to where the market moved higher. So the market's moving in the up direction. So now you got a TK crossover. You're looking for a bounce trade, and then you're looking for your target. Now I'm going to mark these. I'm going to mark the big picture, and then I'm going to show you a little bit smaller. So if we were looking at this and we were talking about getting into any types of trades, so we bounced here. We said this is our target. We didn't quite get to the target. All right. So didn't quite hit that target. But now we're going from the next level. 1, 2, this is pullback. So now this is where the target will be if this is going to be 3. We'll know this is 3 when we get a fractal here and this level holds as support. All right, and we say we're getting into a trade here with a bullish engulfing. I'm going to talk about this opportunity. All right, so first let me talk about the opportunity, then I'll show you the target. Well, actually, let's go. We're already on this. We're on the target, so we go 1, 2, 3, and move that right to the leg right there. So this would be our target at 1999, between 1984 and 1999. All right, but you can see we're going to get past this level that supposedly, because we kind of bounced on that level and we dropped. So looking at where we are now and what's happening here with this asset, with Centurylink, I still like it based off of the technicals here, because yes, we got a little bit sideways here. All right, and we weren't able to break this level here at 1919. All right, but the market bounced on there, then came back to that level. It hit the level and then dropped, but it didn't drop far, and now it appears to be attacking that level again. So on the attack, we had a bounce here where we got into the market, a bounce here where you could get into the market, and then a bounce here with a bullish engulfing where you could get into the market. All right, so when you see this bullish engulfing and you are inside the TK zone with a TK crossover that's bullish, you should be looking to move higher. You shouldn't be looking to move short. You should be looking for this to move higher. Now you got a crossover here that's a bright future. Your TK crossover is bullish. Your price is above the cloud and sequence span's above price. Everything is bullish here, so we should be looking for that long trade. You should enter it right here. Now, when the market opens up on Monday, you may not have that opportunity because it may gap up. You have the pre-market trading, and the market may jump up if you're not in there at that point. So it may gap up or whatever, but if it stays in this area, it would be a good level to enter this market. We're shooting at least for this level because it's a support and resistance level, but then we would shoot for the level that we looked at 1919 and 1984, right? Between 1984 to 1919. So let's mark this. So now we say we enter here, but let's say where our target is. And our target here is based off of the measured move, and we're shooting for this level. Now you always want to get past this level, which is your 1, 2, 3, and then shooting for 4. You always want to get past 2. All right, a lot of traders take the trade at 2. We're taking a trade at 3 because we have a level that we can count on for being a 3, which will be Tenkan-sen, Kijun-sen, sometime your cloud or whatever. All right, so we're shooting for that target. All right, so it's about 20.05 to 1989 in that area. Okay, so you had the bullish engulfing here, and I like that. I like that bullish engulfing, and it looks like we have strong angulation on Tenkan-sen, Kijun-sen. You got a crossover here that's bullish, crossover here bullish, price Chiku spans above price, and price is above the cloud. Only thing that stopped us was this resistance once. Now we're coming back at it. Usually about 65% of the time the market attacks this level again. All right, So there's a good possibility that you'll see this move up to this level about 1919 at least. All right, and then you could you trade from here to that point. So when we looked at the ratios for this thing, it didn't look super strong based on the technicals, right? I mean the fundamentals, but the technicals here look a little bit better for a good move, a little move to the upside, and maybe if we can violate that, then quite possibly a really strong move to the upside. So if we can get past that level, we start looking to our left to see where the support and resistance levels are. So you would go up to this point, right? Look at that as a level, but then you also want to see this flat cloud back here. So mark that as a next support and resistance level. You want to see the market get to that point. Then also you have a cloud here, flat cloud would be resistance. Then you mark the next flat cloud. And then up here, if you could get that far, that would be great if we could, right? But okay, that's going to be it for Centurylink. So like I said, I'm going to be having I'm going to have a course coming out shortly here for trading stocks, and I tell you before, it's going to include trading with Ichimoku, but also trading price action, trading the naked chart with just price action, and fractals. Fractals, I can trade the market with just fractals. I don't need anything else. So you could take this off. You could also use I'm going to show you how to use moving averages. So I like to use the 21 period moving average, 50 period, 100 period, and 200 period moving average. All right, and then also going to be looking at some other indicator trading like RSI, Williams percent R, a lot of divergence stuff, things of that nature. All right, so that course will help you out with some of your trading, and it's not on my site yet, but it's coming very soon. All right, so hopefully this helped you guys out, and until next time, guys, have a great one. God bless.